Today I'm going to be presenting on what we as an organization are doing in the Caribbean and why it matters to the blockchain and Bitcoin ecosystem and space. So without going too much into blockchain technology, I think you guys would have been bombarded with that throughout the day. I think I can skip the first few steps. The benefits of blockchain are well known, and in our particular case, we utilize the Bitcoin layers for its trustlessness. It operates. Is this my? Yes, it is. Okay, it's even better. So it operates through consensus. It operates on an immutable public record. It removes the risk of forgery through the double spend problem, and it enables interconnected financial systems because it's open, it's built on an open protocol, anyone can connect to it. How can it be applied to industries? There's a very large range of industries. Some are listed here, from banking, private shares, interbank payments, online commerce. Going further into my presentation, I can go into one particular industry that we are interested in, and that's digital cash issuance. So Bit.com is a financial technology company that operates in the Caribbean, and there's a reason that we do. There's a couple of some fundamental systematic risk and issues that exist within that part of the world. Starting from high settlement times, the lack of financial infrastructure results in a high settlement time within most of the markets because it's also cash dominant. The main mechanism of movement of monies or value transfer is the wire transfer system. Checks are still a very dominant thing on most of the islands throughout the Caribbean. Now, the Caribbean is made up of 30 different territories, ranging from the British territories to the US Virgin Islands to the French, the Spanish, and then you have independent territories like Barbados, which is where we operate and where I'm from. Some of the other problems in the region are unbanked citizens. You have a general part of the population that do not have access to financial services. This is partially because of the onerous activities to open a bank account in the region. It could be lack of identification systems or onerous costs against owning or maintaining a bank account. Lack of banking infrastructure, another massive problem in the region. For example, here in America, for every 100,000 citizens, you guys boast around 200 ATMs. In the Caribbean, for every 100,000 citizens, we have merely 30 ATMs. And that's just one example. That doesn't even talk about the bank branches and the modern infrastructure like online banking. The next problem in the region is fragmented currencies. The fact that you're dealing with multiple different islands, Barbados, Jamaica, Haiti, Cuba, they're all using independent currencies. Restricted barriers to e-commerce. For example, in the region, the starting e-commerce platforms are $1,500 to sign up, $150 a month, and 3 to 5% per transaction. High remittance costs. A very big portion of Caribbean people, the diaspora, live here from Miami to LA to New York, and they send money into the region. Sending money into the region has an average cost of 8 to 15%. So for every $100, $8 to $15 is being siphoned off by third parties. There's no open gateways. You have a fleet of islands and offshore territories, but no one's using a common platform. Everyone's operating on different rails, different systems, and it's not based around open trade or interconnectivity. And then the biggest problem facing the Caribbean region is a threat called de-risking. Now, de-risking is where the correspondent banking relationships are threatened and removed from the indigenous banks within the region. So looking at a territory like Belize, they would have lost their correspondent banking relationship. And what this would have meant was the citizens of Belize would have not been able or would not have had the ability to move US dollars in or out of the country. This is the death of some of the territories in the region. So the answer to us as an organization many years ago became quite evident that it was blockchain. It was the only real solution because it solved a multi-set of problems at this magnitude. It suspended the need for complicated correspondent linkages, and it made all transactions transparent and traceable. We'll get into further issues right now, such as de-risking. where it was the phenomenon occurring largely in international correspondent banks, where correspondent channels were restricted to broad classes of customer relationships. So in the example that I gave of Belize, we would have saw what occurred when a country lost its entire ability to move US dollars in or out. And this would have resulted directly from a form of de-risking. Some of the reasons are it's perceived as high risk. The region is relatively seen as high risk, and it's seen as very low reward because you have multiple territories, multiple sets of rules and regulations, different governments, different central banks, a multi-set of legislation. So the amount of work required adds for a level of low reward. One of the major solutions would have been an inter-Caribbean settlement network to reduce the regional dependence on international banking systems, and using blockchain technology to enhance the anti-money laundering and know your customer transaction monitoring and the customer due diligence through digitization of currency. So what we're going to jump to right now is where we as an organization took lead. And this was the building blocks of digital money. So we know what digital assets are right now because we have one that's the predominant of this entire conference, Bitcoin. And they're cryptographically secure tokens that hold value and can be transferred between two parties without the need of a central counterparty. That's a pretty important part. Bitcoin is an example of one digital asset, but the technology can be built upon. Utilizing technologies such as Ethereum, sidechains, micropayment channels, alternative protocols like the colored coin protocol, you can build digital fiat currencies. With blockchain-backed cash, the transaction is a settlement. I'll go into further how we accomplish this mechanism, but these digital assets open the door for smart economies. So Bit.com is a financial technology company that would have established itself in Barbados in early 2013. The goal was to bring financial inclusion to the people of the Caribbean through building out next generational products. Bit tried to accomplish this by breaking down the money supply chain into 3 layers. Our services allowed financial transactions to become digital, affordable, and openly available to everyone. What we did was we decided that the only way to really redefine an ecosystem and introduce a brand new money supply chain was to start from the top-down approach. So what we realized was the money supply chain was broken into 3 layers: the asset creation layer, the asset distribution layer, and the asset accessibility layer. Or in the case of money, you had central banking, commercial banking, and retail. So we looked at this mechanism and decided we would start at the central banking level. And in 2014, we proposed to the Central Bank of Barbados, what if you took the issuance process and digitized it? Of course, that was an unsuccessful attempt. But throughout the next year to 2 years, we came back with better policies and procedures ranging from disaster recovery to offline issuance to counterterrorism financing, anti-money laundering, all the things that a regulator would have wanted to see that would have matched the software and technology. So it just was not about technology, it was also about process and mechanisms. In 2016, in February, we successfully launched a pilot with the Central Bank of Barbados to launch a digital token of the Barbados national dollar, to which we did, and we used the open asset protocol, the colored coin protocol, to issue the assets on the Bitcoin blockchain, thus completing a prototype of layer 1, the asset issuance. We then went on to create and integrate into banking systems the asset circulation layer, which have been the ability for these banks to read or recognize this digital issuance into the checking and savings accounts, or particularly into a user's mobile wallet, and it can be accessed through various mechanisms of trust services. And then layer 3, a layer that we are all familiar with, the mobile wallet, the merchant, the teller, the average consumer, the consumer-facing side products would have been sitting at this layer. So over the year of 2016, we would have rolled out prototypes of each of these layers and had the completed interconnected system. Our main mission and goal and objective as an organization was to build a settlement network, the Caribbean settlement network, and a payment system framework built entirely utilizing blockchain technologies. BIT is building a payment ecosystem to achieve a cashless society. So our first phase was to launch layer 1, 2, and 3 in Barbados. So throughout the better part of 2016 and into Q1 and Q2 of 2017, we'll be rolling out different digital financial products in Barbados and throughout the rest of the Caribbean region, facilitating the digitization of the base physical cash at the central banking level. In order to accomplish the next steps, we were building a network of trust by creating a compliant environment to protect our consumers. So we worked very closely with various regulators in the region, and particularly the central bank, to ensure that we provided the highest standards of accountability and security for our consumers. One of our main goals was design software that would meet the needs of each of the citizens in the region. So towards that future, some of the main things missing and how we accomplished and battled them were the lack of regulatory frameworks. So we collaborated with regulators in the region and officials by advising and providing counsel. We would have spoken at IMF, the World Bank, the Caribbean Development Bank, the Commonwealth Secretariat, the United Nations, all to the mission of ensuring that Bitcoin would not be regulated in such a way that could hinder the technology, but in one where the companies like Bit.com could build on top of the technology and build out better products. So we actively played a massive role in regulatory framework amendments and updates throughout the region. The slow pace of business in the Caribbean region, if anyone's ever been there, it's well renowned for its island time. Everyone takes it easy there. We brought an internet culture to the organization, and that encouraged a fast pace of movement. Especially within the region, that makes a very big difference. Jurisdictions with different laws. So throughout the region, you have approximately around 32 different territories. I would have alluded to the fact that you range from the British to the Americans to independent islands. So we would have worked with different laws and work with the different constraints in each law to make sure that we can provide common frameworks that can be looked at. And this is an ongoing mechanism going on every single day. The large cost of compliance. Compliance is a very onerous cost to an organization like ours. And we used industry-leading compliance and legal frameworks to make sure that we were delivering above board standards, but particularly because we're dealing with a digital currency like Bitcoin or the Barbados digital dollar, we had advanced mechanisms of control and monitoring. So this actually cut our cost of compliance versus the fiat currency we were managing on hand. Correspondent banking pressures. So just like other banks in the region, we do face the same correspondent banking pressures. However, we're using a different tier of monetary solution. We're using the Bitcoin blockchain tier. And thus, we're able to eliminate that potential risk. But even carrying it a step further, we would have been integrated with various regulators from the BIT license, which we would have been and actively are pursuing, all the way down to the FCA license and to the same extent getting an MSB in Canada. The reason for this is it would have battled the regulation needed for remittance and financial activities to occur to and within the region from beyond the region. The cash dominant remittance market. We would have battled that through one of the most important things is while the Caribbean is not on par with the developed nations when it comes to banking infrastructure, we are on parity when it comes to mobile wallets and when it comes to internet. As a matter of fact, some of the islands like Barbados and Trinidad boast 140% penetration rate of smartphones, meaning that immediately the entire nation can be turned on to a new world of financial banking. The network that did not exist, we've been battling that by creating a Caribbean settlement network based on open protocols and better mechanisms. Looking at standards like ISO 20022 built around open payment standards, and making sure that the other financial institutions, credit unions, and telecoms started to participate in this open standard of digital currency, starting at layer 1, introducing it at layer 2, and ensuring that consumers had access to this digital mechanism at layer 3. And then strained regional relationships. By forming the Caribbean Settlement Network, we've been bringing together various regulatory bodies and bodies throughout the region to start looking at this mission as one of the greater missions for the Caribbean region towards sustainability. Now, with all of this being said, why this matters to the ecosystem is because you have an organization that is actually building something on top of the Bitcoin ecosystem, something that would allow us to accomplish a next generation of finance at all three layers of the money supply chain, thus entering a brand new age of smart economies. From here, we can build a fleet of various products based on advanced credit systems, peer-to-peer loans. The sky is really the limit, and it fundamentally is something that can change the paradigm of the region and also add and strengthen the community within the blockchain space. Thank you. Well, thank you, everyone. Yes? In a strategically advantageous position? Absolutely, the Caribbean provides that for us. Let's look at Barbados, for example. Access to resources. In America, I would have never have got a central bank governor. You're talking about litmus tests over here. So being able to see an environment deployed, and it's a fail quick model. You're able to see what an entire ecosystem looks like once it's deployed, from not just the layers of money, but from all accesses of transactions, where every transaction can now, in theory, become digital within a closed economy. That can be piloted, tested, and rolled out a lot more efficiently and quickly than a larger country, let's say India, Russia, or China. So you have access to the resources, the ministries, the FIUs, the regulators, the central banks, the commercial banks, and you can bring all of those actors into the room to have an intelligent discussion about what would an ecosystem look like had it been designed. So yes, the advantages are there for the markets in the Caribbean. Furthermore, once again, you have 32 different governments. If one doesn't work with one, you can go and get on a boat and head over to the next island. It's the domino effect, absolutely, and we have that statement in the better part of 2016 is a testament to what we've been seeing. After getting the Central Bank of Barbados, the rest of the regional central bank governors would have started to peak up. Interest would have started moving forward. It's a domino effect, it really is. So there's multiple models that you can launch. You see, now there's something that I should actually bring up and why we matter in this space. We would have launched the first ever digital cash on a blockchain approved by a central bank. And off the cuff, that doesn't sound pretty, but why that matters is you can look at a model like PayPal or M-Pesa, Safaricom. They're creating centralized monetary systems. What we have in essence created is a decentralized monetary system. The Barbados digital dollar is a peer-to-peer tool. Bit.com or the government of Barbados couldn't stop that dollar from moving from Joe to Harry in a peer-to-peer fashion. And we've never seen this occur at the regulatory central banking authority level of a country before. The centralized risk that we face as an organization, as a hosted wallet, the risk of someone using our platform for terrorism financing, money laundering, or fraud. But through good policies and procedures, through a good compliance program and making sure your compliance officers are doing their job, and through good financial operations, you avoid those centralized risks. But ultimately, you try to decentralize the problem as much as possible, while knowing that if you go too far in the decentralization end, you might destroy the usability. So we try to find that balance that covers customer usability in a developing nation or nations like the Caribbean, while ensuring that we match the needs for regulators. And it's a middle ground that I think we found. But yeah. we do, for right now, we only onboard, so we onboard all Caribbean islands, but currently funding mechanisms occur predominantly through US dollars, not with US citizens, non-US residents. There's various license restrictions there. But for the purpose of onboarding, we have a compliance program that has various levels of onboarding, from asking for proof of address, proof of ID, and this is before being able to fund your account. In the digital currency aspect, because of the general nature of digital currencies, there is the ability to transact with BIT without a high level of KYC being submitted. But once you move into the digital fiat, we have to abide by the laws of the various jurisdictions of the currencies that we're interfacing with. We actually we actually operate, bit.com originally started in 2012-13 as a push and pull digital exchange. So it's driven by free markets, to be quite frank with you. People list their buy orders and their sell orders according to the currency pairs, and I'm confident that free markets are the way to go. So the short answer on it is a push and pull digital currency exchange is what allows people to derive at a price. Obviously, you would be using maker-taker fees and I mean bots to try to populate the liquidity of the order books, but it's your standard exchange behind the scenes. Yes. Oh, absolutely. CIMA, the Cayman Island Monetary Authority. Well, we love them. They told us in early 2014 Cayman doesn't have any such laws or any plans to regulate the industry or to bring about regulation. But since then, there's been nothing further in terms of due diligence or advancements made. But we do, as a matter of fact, one of our very first businesses were operated from the Cayman. So hope to see you soon in 2017. Yes. Cuba has 5% internet penetration rate, so it's a little bit difficult. My partner, who's sitting directly behind you, would have scouted Cuba 3 times already, got diarrhea on one of the trips. Loves the place, absolutely amazing. Octopus is their main dish. But Cuba's market just isn't. It's not there yet. You're talking about a market that it has low internet penetration rate, low infrastructure. It's now starting to open up to the international market. The regulation isn't there. It's a very difficult market to navigate with or without government networking or connections. So it's generally one of the last markets in our Caribbean expansion policies, but it's definitely one of our markets, but not I wouldn't say an immediate market. Beautiful market, but not immediate. Absolutely. Self-regulation is part of the name of the game right now. A lot of the regulators are taking the hands-off approach, the wait-and-see approach. And what that comes down to is you, as an organization, having to take a level of responsibility to look at best practices, learning from what not to do with a Mt. Gox situation, what not to do with a Bitfinex situation when it comes to cold wallets. These various self-regulation tactics that one can impose on its own company. That's generally what we have been doing for the last 3 to 4 years. And there's other standards that we follow, like the Cryptocurrency Consortium, the C4 standard, introduced by Mike something, amazing guy. But the fact is, there's self-regulation's a big part of it. And it depends on the licenses you go for as well, because then it would like the bit license, for example, would have been a very stringent and onerous set of activities that our organization would have had to follow in order to be compliant. Thank you very much for your time.